AMC's shares hit over $30 a share before close today. And the number one question that I'm getting from everyone is, should we be shorting AMC shares at these price levels? In this video, I'm going to be explaining if you should be shorting AMC shares, and stick around to the end because I'm going to tell you exactly what I did. You're watching More Money. Let's get it. What's up, guys? Welcome back to the channel. You guys already know what it is. I'm Tay, 20-year veteran of the investing game, and you're watching the #1 channel for people that want to retire early. And guys, please smash that like button because it really helps YouTube know that this channel provides valuable content. Also, if you're new, please consider subscribing to the channel. All right, let's get right into it. Okay, guys, so the way that I'm going to go about talking about AMC here is, first, I'm going to give a quick background of what happened. Second, I'm going to talk about what has happened with the shareholdings, like the dilution. The third item that I'm going to cover is what has happened with the owners of the capital. And fourth, I'm going to go over the valuation of any potential short positions that you can make. And of course, stick around to the end because I'm going to end it off with exactly what I did today to potentially short or not short AMC. Now, just starting it off, guys, you guys already know AMC is a company that's been having massive problems even before coronavirus. They're running losses every quarter because the movie industry is slowly dying in North America. More and more people are staying at home, watching shows on Netflix, and this coronavirus pandemic has only furthered that trend because now we have serious amounts of investments that have gone into Disney Channel, HBO Plus, Netflix, and Amazon Prime. Now, I'm not saying that movie theaters are largely going away, but I am saying that I expect that the footprint of movie theaters to be significantly lower than what it was pre-pandemic. Now, of course, the shutdowns didn't really help AMC, but what's really interesting is that in Q1 of 2021, we noticed that even with most of the theaters open now, only 10% of the audiences have come back in North America, and internationally only 2.7% of audiences have returned. Obviously, these numbers are going to go up, but what exactly is the impact that we're going to see here? Will 50% of the audience come back? Will 75%? We don't really know, and personally, I don't think we're going to finish 2021 with over 50% of the audience coming back. So needless to say, AMC is in serious trouble operationally. But to help put this into perspective, if the audiences came back to 100% of pre-pandemic levels, they were still running losses in those periods. So there's still systemic issues here, as I explained before, and I think the pandemic only sped up the decline in the number of people that want to go to the movies on a Friday or Saturday night. Now, let's go into the biggest challenge for anyone who's thinking to be a long-term shareholder here, which I don't think anybody really is at this point, but let's just go right into the dilution. Now, the numbers here are staggering, and I honestly think that this is going to blow your mind. They began 2020 pre-pandemic with 152 million shares outstanding. Now, hold on to your socks. From here, you can see that in September of 2020, they issued 15 million shares. In October, they issued 15 million more shares. In November, they issued another 20 million shares. And then to close off the year, they issued another 48.9 million shares. And that wasn't it, because they also issued 22 million additional shares in 2020. So they closed off 2020 with the issuance of 120.9 million shares, which helped them raise $490 million. Now, speaking of that approximately 121 million shares, recall that they only had 152 million shares to begin the year at. So they effectively nearly doubled the share count by the end of 2020, and it doesn't end there. In January of 2021, they issued another 50 million shares. And then again, in January of 2021, 600 million of convertible debentures were converted into 44.4 million shares. And then in April of 2021, they issued 43 million more shares. So as of April, we were up to 258 million shares, which is now 170% dilution of the original 152 million share. Now, I actually think that up to an additional 500 million more shares could potentially be issued. But before we get into that, I'm going to talk about the ownership, and then we'll tie it all in. So Silver Lake Partners initially invested $600 million to purchase convertible debentures in the company in September of 2018. Now, due to the run in shares by the Wall Street Bets community in February of 2021, Silver Lake decided to convert all of their shares and sell them off into the open market. So they effectively made a killing while simultaneously exiting their position. Now, Mudrick Capital is another company that issued convertible debentures to AMC. Now, they also largely converted their convertible debentures into shares, and they're likely out as well, netting at least a $200 million profit, which is what estimates seem to be. And the last shareholder, arguably the most important one because it was the majority shareholder, Wanda Group, largely sold all of their positions by May 21st of 2021. And by selling their shares, they effectively removed their 2 board of director members that were sitting on the board previously. Now, we have to read in between the lines here because I think this is very important. On April 27th, management proposed that they were going to issue an additional $500 million at the money shares. Not $500 million, 500 million shares, which means that at $20, those 500 million shares could raise $10 billion. The current market cap of the company is only $11 billion at its current inflated prices. This was blocked by shareholders, and I think the major shareholder that really blocked this was Wanda Group. I am speculating, and this is not news, so it is a speculation of mine, that Wanda Group wanted to get out before that announcement was made, because that 500 million of shares being issued is going to decimate the stock price, I think, in my opinion. AMC now has 3 million shareholders with nobody owning more than 10% of the shares, which means that AMC can easily pass a resolution where it allows them to issue 500 million shares. I actually think that this is coming, and in their April 27th press release, they did state that they are going to revisit this 500 million share issue. So the question is, does it make sense to issue 500 million shares? You're absolutely going to dilute your shareholder base, but here's the thing. They have $5.7 billion in debt. Issuing 500 million shares at $20 a share, which is way under what they're currently trading at, will earn you $10 billion. So they obviously don't have to issue all the shares to wipe off all the debt. But the thing about it is issuing shares when they're overpriced relative to what the company's operation should command is not dilutive. I actually believe it's accretive. That being said, if you can issue shares and wipe off the debt, you're doing the shareholders a service because you can't go bankrupt if you have no debt. Also, if you're issuing shares at an elevated price, then all you got to do is leave the cash on your balance sheet, wait for the share price to come down, which I believe that it will once the whole Wall Street bets hype is gone, and then you'll be able to buy back shares pennies on the dollar. Now, do I think that they'll go down to pennies on the dollar? Probably not, but you might be able to issue shares at 20 bucks and buy them back at $5, which is still accretive to your long-term shareholders, but it's not so good for your short-term speculators. So honestly, that's how I think this is going to go, or at least that's what the information that's being presented is telling me. If the Wall Street Bets community continues to run this share higher, it's going to be more and more likely that all 500 million of those shares are going to be issued. At the end of the day, for the management, this is a once-in-a-lifetime opportunity for them to keep their jobs. Issue as many shares as you can, wipe off that debt, live another day. So now the question is, should you short these shares? Now, I think the at-the-money shares are a little expensive. The $25 puts for next month, so 30 days out, cost $7.50. So you largely need a 30% move in the share price to break even. So 30% in 30 days, that seems pretty stiff. Now, should you straddle this opportunity? So the way to do that would be to buy a put and a call. The problem is the $25 call costs $8.20. And of course, as I explained earlier, that the put costs $7.50. So you would need a $14 move or a 56% move in the share price before you broke even. So it's pretty steep to straddle this as well. So the only other opportunity that I see is a significantly out of the money put. I personally like the really long dated, the January 2023's seriously out of the money puts. I bought something at 60 cents when the shares were at $30 today, and it closed at around $1 per share. So, but with that being said, I do have to warn you guys, buying options is incredibly risky, and I would never ever recommend it to anyone. Some people say that around 80% of all options that have ever been written expire worthless. That point is a little bit arguable. However, the real point of that is that options are risky, so please be careful. But with that said, in my 20 years of investing, I have never actually purchased a put. I've never seen the risk reward there. I do see it with AMC, especially long dated into January 2023. So I did buy a put on the security way out of the money. I didn't use a lot of money in the portfolio. I only used less than 1% of the assets in the portfolio. So the way I'm thinking about this is because if this thing makes a little bit of money, it's not a lot up front. I'm thinking it might double, and if it does, I'll take the wifey to Bali. So that's how we'll do it. All right, guys, that's it for this video. If you received any benefit from this video, please smash that like button. If you're new, please subscribe to the channel. And of course, guys, I'm going to be doing a deep dive into Rocket Mortgage this weekend, so please look out for that when it comes out by subscribing to the channel and ringing that notification bell. All right, guys, that's it. I'll see you later.